Hi there, everyone. Welcome to our enhanced growth strategy for store of value, gold and silver physical ETF, GLD and SLV. Just a quick general advice warning. Document contains general advice only. It has been prepared without taking into account your objectives, financial situation, or needs. Before acting on any advice in this document, you should consider whether it's appropriate for your circumstances. Now, for those of you who have followed us for a while, you'll be very familiar with the store of value. We've had many trades of this ilk on in the last 18 months to 2 years. And we're seeing with this US-Iran situation that has caused inflation fears and driven bond yields up and triggered a 22% pullback in gold and a 50% pullback in silver. In reality, nothing overall has changed. Essentially, what we've seen here, we've been buying since 2024 back here. We did exit some back in January around this levels here, and it's now pulled back all this way. This is a gold chart. There's the 200-day moving average, which is a key critical support, and it's all to do with the fact that bond yields have gone higher. So we had a 50 basis point move in 10-year Treasury yields in the US. And we've had a similar situation to this in the 1990-91 Gulf War operation, Desert Storm. There was an initial rise in bond yields, oil inflation sort of shock phase, triggered a sharp oil price basically doubling, which we didn't quite get to recently, created immediate inflation fears that pushed treasuries higher and investors obviously demanding compensation for higher expected inflation rates. But the subsequent reversal that came was a very similar situation to what's going on here at the moment. We were on the cusp of a recession back in 91, 90, and then really the shock of the energy prices going up actually was detrimental to growth. And then the markets shifted really quickly to focus on the inflation shock damaging demand and economic growth, and overwhelmingly just putting aside the inflationary impulse, and yields reversed very sharply. So that being the only catalyst really for gold and silver to be basically being sold off, US dollar as a safe haven, etc., really is still very definitely in play. The US debt spiral will actually worsen from this point. And we're roughly around the 38 to 39 trillion mark now, and we've got the likes of the Pentagon asking for 20% budget increase of $200 billion, to increase defence spending, etc. as well, which is really only going to make this worse and probably trigger a further downgrade of the US dollar. Now, this is, Kai's done some research here around the 1970 stagflation, and has got a few stats here. Kai, run us through the inflation and the oil shocks, etc.
So I think it's really important to actually look back in history because it does give you a lot of hints in terms of how things will perform. Wars in the Middle East in the 80s or 70s to 80s. So the first war was in the Yom Kippur War, where the Arab states invaded Israel. In that situation, gold went from $95 to $185 within 15 months. Similarly, in the Iran-Iraq War at the end of the 1970s, it had about a 278% rally in a 14-month period. So, obviously we've had a really good gold run for the last year and a half, 2 years. It might not be the situation the same as 1979. But I think, the thing that I think a lot of people are missing is the level of inflation that this will cause, the current situation in the Middle East. Historically, basically, when we look at how the asset prices perform, the inflation comes about 6 months after these oil spikes. And the last thing to change is interest rate. Of course, the reserve banks and central banks are reactive to inflation. So in that period where inflation is spiking, gold and silver does really well, and that's why we've chosen that as the underlying asset for the basket.
Yeah, I mean, the 1990s case was essentially, an example of where inflation almost does the hiking for the central bank. And it's not, these are not history, often rhymes, but it rarely, repeats the exact same conditions. But mean, you can just see here particularly with gold. I mean, we obviously this current cycle is ongoing here at the moment, and then but look, I mean, I think we can safely target, around that 7,000, somewhere well north of sort of that 120 high in silver as well. And over the next sort of 12 to 18 months, realistically, and then we can sort of see here the basically the Fed funds rate and the assets and how they're linked to inflation, etc. over that course of that period. Go to the investment document. There is a tax wrapper around this investment as well. It is available to retail. It's roughly around similar, it's around the similar sort of mark for $16,000 odd for $100,000 exposure. There's a couple of other features, etc. Grab that, and Kai's going to run you through that in a separate video, but we just want to run you through the reasons why we're looking at putting this gold and silver back on. So yeah, go have a look at the PDF. If you're retail, have a look at the PDS. And then you can also have a look at the tax, tax optimization wrapper that we put around this investment as well. And then get back to us soon. Thanks, Kai, and take it away on the explanation of the rest of the strategy.